Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Wonderful to be here with you all this morning. Seth Udinsky, Samuel Case, and your host, Mark Minnella. Mark, it's great to be here with you on a Tuesday morning, brother. How are we feeling today?
It is a beautiful Tuesday morning. We have thunderstorms here, but it's good seeing you all. Seth, Sam, thank you for being here. I love seeing you on the monitor there. And even though we can't be side by side like we were about a month ago in the studio, I look forward to doing that again sometime
Likewise,
soon,
brother.
Where we can all just be together, having a great time broadcasting truth and fellowship together and financial issues.
Yeah. Hey, listen, folks, we appreciate you all so much. Can't do what we do without you. You all are what make the show go. So appreciate your support, love, and prayer for the show and your calls as well. Call into the show right now. Now's the time to do it. The phone lines are open. The number is 610-363-1110. 610-363-1110. You know, Mark and Sam, I'll bet we got quite a few tradesmen or perhaps retired tradesmen in our audience. I want to pose a question to you all and invite you to join in and speak to this question. Here it is. The number of skilled tradesmen in this country seems to be diminishing. Why is that? Why do you think that is? We'd love to hear from you. Call in and tell us at 610-363-1110. Especially if you are a tradesman, we'd love to hear from you and hear about your experience. But guys, to kick it off, yesterday we had a very interesting comment in the chat. Lisa, our friend from Texas, who gives great comments often, and this one was also a great one. She said, when the market crashes, everything crashes. And Mark, I thought it would be a good idea for us to maybe take a deeper look at this here as well. So Mark, take it away here. When the market crashes, everything crashes. Is that true? Is that not true? What do we make of this?
True or false, Mark?
Yeah, right.
True or false? Okay. Well, yes, it's true and false. Absolutely. I like
That's the right answer. You win.
Okay. Because really, the reality is, from the broad market stance, everything goes down. From sector stance, actually all the sectors, like in 2008, pulled back as a sector. But individual stocks, there's always a few stocks that don't go down. And I couldn't remember the other day what those stocks were in 2008, but I remember there was a couple that just hit me like, yeah, that totally makes sense. For example, Walmart was one of them that really didn't take a hit during the 2008 crash. There was other consumer staples too, like discount and value places, like what was it? Dollar Tree.
Dollar Tree. Yep.
Yeah, Dollar Tree. Those are defensive stocks. Those are stocks that are made to help, that do well even in hard times. I guess they're not they're not these screaming bottle rockets like Nvidia or things like that. But what they do, they help maintain a little value when the markets head down. So there were a handful from several sectors that stayed up. Mostly they were defensive stocks. Bottom line.
Yeah.
So one of them, I just glanced down at my notes. McDonald's was up during that. It's like, okay, why was McDonald's up during 2008? I guess people had an urge for fast food or things like that.
Well, that's back when McDonald's was actually still cheap, you know?
Right. Exactly
that's
right.
true. Yeah. You're right. Another area was there was some health cares that were stayed up and strong and positive, actually one of them, Dollar Tree, the gain during the crash, Dollar Tree was up 60%, Walmart up 20%, Amgen up 24%, Gilead Sciences up 15%, McDonald's was up 9%. So that's pretty cool. I mean, if you happen to be in those, they helped offset a little bit of the losses for you, even though the losses were extreme in 2008. Even bonds lost money in 2008. That's the one thing. So when she says, when the markets crash, everything goes down, well, it's pretty much true in that sense, because just about everything goes down. There are those stragglers that refuse to give in, though.
Yeah. It's good stuff, Mark. 610-363-1110, folks. Mark, I can remember our founder, Dan Celia, saying something that actually, interestingly enough, Warren Buffett had said at one point as well. Those guys said, and you'll have to forgive me, folks, if you remember the exact quote, but I'm trying to just bring this up from memory. But they basically said that they didn't lose during the 2008 financial crisis because they never got out. What is the wisdom to that, Mark? I mean, when we're, talking about just that kind of holding fast, grinding to the end, doesn't matter if the markets go down, I'm staying in till the end. What do you make of that?
Yeah, usually that kind of wisdom comes from somebody who's been in the markets a long time.
Yeah.
They've seen the pullbacks. They've seen the charts. Like we showed a chart not too long ago that showed the bear and bull markets and how short the bear markets were compared to the bull markets. Where we see tens of years in bull markets, we see a year to 3 years or less, somewhere in there usually for bear markets. So they realize that the bear markets are very short-lived comparatively, and they don't panic during that time. In fact, if they have the dry powder, if they have the cash like Buffett does right now, the $300 billion sitting there, when the markets do crash like that, they get all giddy and just buy in and buy everything up at a blue light special,
Yeah. 610-363-1110.
Mark,
Folks, we
for
want to hear from
reference here, I do have that chart, and the average bear market lasts about a year, losses around 30%. Well, on the other side, as you're saying, no, not that chart, Graham, sorry about that. I don't want to confuse people. The average bull market has lasted nearly 5.5 years with gains of approximately 250%.
Yeah. So somebody who's lived through downturns, who lived through crashes before, they know that it's time to buy and it's time to be still and be at peace. The neat thing about financial issues and our partners and all those that are together with us is we have a little weapon that the secular world doesn't have, and that's the Holy Spirit. We are able to be at peace even during the storm. That's what's really cool. We don't have to panic. We know that our provision is not from Wall Street. It's not from the government. It's from God. So we don't have to get all worried and concerned because we know our God makes promises and he keeps his promises, and he promises to care for us, to supply our needs. Maybe not our wants, but our needs. So we can be still, we can be comfortable, and we don't have to panic. And when the markets do crash, even if it catches us off guard, like sometimes it does, we can be at peace and say, oh, now's a great time to buy. Praise God. We could look at it and see the glory in it instead of the pain. That's what's really cool. The rest of the world doesn't have that. They have to panic and they have to do things like, go out and eat fast food to try and help them to feel better about life and
ease the pain.
Things like that. Yeah.
Yeah. No, but you know what, Mark? It makes complete sense. With that one in particular, you talked about McDonald's surviving the 2008 crash. People needed to eat for cheap, and so they were able to do it. Mark, that's a really good reminder there. Interesting headline I saw related to this, guys. Looks like the bond market is heading for the best year it's had since 2020. Sam, what can you tell us about this here?
Well, Seth, you just kind of ruined the headline, didn't you? Yeah, this is according to the Wall Street Journal.
My job is to steal Sam's thunder.
I know. Well, according to the Bloomberg U.S. Aggregate Bond Index, they've seen returns of 6.7% this year. That's also accounting for price changes and interest payments, but that is on pace for the best year since 2020.
Yeah, and that makes total sense. When you see interest rates coming down, most people who study the markets a little bit realize that as interest rates come down, those existing bonds that have higher rates are worth more to people than the new bonds. So the bond market goes up. That's what we're seeing there. That's part of it. But the other part might be people are finally getting over what happened in 2020 to 2022 in the bond market, where it just took a terrible hit because of increasing prices, increasing rates when inflation went through the ceiling, when the Biden administration caused all the inflation, increased the rates, all this different stuff. We saw the opposite happen. Well, that whiplash of that market, we saw about an 18% drop in the bond market. So that was pretty heavy, and a lot of people got stung by that and stayed away from the market. But now they're seeing the decreasing rates, so the bond values are going up, and I think people are starting to move in again. In fact, this might be one of the best bond markets probably since, I don't know, in the last 10 years, 20 years.
610-363-1110. Mark, appreciate your insight. Folks, we want to hear from you. Now's a great time to call in. You got the rest of the show to give us a call. Coming up on the other side of this break, guys, I think it'd be interesting to talk about what we teed up at the top with the number of skilled tradesmen, particularly when it comes to the auto industry. An interesting story there that we'll get to on the other side of this break. But folks, listen, we want to hear from you. 610-363-1110. Again, 610-363-1110 is the number to call in. We got more financial issues coming up on the other side of this break. Hope you'll stick with us. We'll be back right after this. Don't go anywhere.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Read carefully before investing.
Most people have no idea what their money is funding. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. Our daily live broadcast covers the economy, markets, and even politics through a financial lens grounded in a biblical worldview. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
$610-363-1110. Give us a call, folks. Boy, we'd love to talk to you. 610-363-1110. Mark, I'd love to just take a minute here to talk about one of the sponsors of our show, which is Preborn. I love Preborn. I love what Preborn does. Preborn.com, folks. If you're a Christian and you hate abortion and you love the gospel and you love Jesus Christ and you want to see people come to Christ and you want to see babies saved, I cannot think of a better ministry to support. I really can't. Preborn does it all. They save babies from abortion. They bring the gospel to mothers and fathers, Mark. It's amazing. Absolutely amazing.
It is amazing, yes. Yeah. And we're so grateful to be able to partner with them, and that we have partnered over all these years. This is one ministry that we all can agree on, that it's worthwhile. Any life that could be saved is a beautiful thing, and that we get to participate by sharing this ministry together is a wonderful thing.
Amen. 610-363-1110, folks. 610-363-1110. Mark, let's get to this one here. So interesting stuff I'm seeing. It looks like Ford is unable to fill their mechanic jobs. Very fascinating. Sam, what can you tell us about this one here? What's going on with Ford?
Well, they're in a sticky predicament. Their CEO says the company right now has 5,000 of those professional mechanic jobs up for grabs, paying a whopping $120,000, and yet no one really wants to take up the job. And as a result, the company says it's experiencing a critical shortage of skilled trade workers, and the CEO says this could be a crisis for the country itself. Now, I might not necessarily disagree with that, but it should be noted that many mechanics are saying, this offer of $120,000 might be a little misleading, as these positions are often paid per job completed instead of a traditional salary. So that means it's probably unlikely you're going to make the full $120,000. So that's just clearing the air there. I don't know if that's actually true. I've not looked at this contract, but still, he is right that there is a major issue of people not taking these trade jobs. It's estimated there are over 7.5 million trade jobs unfilled in the U.S. right now. As a result, Mike Rowe, the dirty jobs guy, he's calling for a sort of Manhattan project to get trades workers online, or else we're going to be in for a world of hurt in the next coming years.
What do you think, Mark? I love that. Mike Rowe is one of my heroes. I don't know why. I just liked him in Dirty Jobs so much. It was one of my favorite shows. I loved what he did and how he did it. And he's been on a campaign for a long time. Him and Kirk both had the same attitude. It was like, college is great, but it's not for everyone. There's great jobs out there where you can make great money. I agree. I know several mechanics, and they're not making anywhere close to $120,000, and they're working at major car dealerships. So though I think he sensationalized this, the CEO of Ford sensationalized this. Maybe they paid their mechanics internally at the factories, but they're not doing it at the dealerships like that. And if they are getting that, they're having to do things like do sales, sell up the repair work and stuff like that. That would be my guess. So if they were making $120,000, I think we'd see a lot more people going into it. I don't know. I'd like to ask our listeners, do you know a mechanic? Do you know how much they're making? Do you know if they're making anything like that? That's kind of an aside, but I'd love to hear from you about that. But also the idea that there's so many industries right now where labor is missing, where we need people to come in and actually do the jobs that and they pay real well. We're talking about construction and plumbing and electrical and all the trades. We have a shortage across the board. It's hard to get somebody to come out and work on your house or to build a house anymore because there's not enough people to do it. I think that really reflects on a culture, and maybe it's not a good reflection, because I think that maybe I don't know. When I was a kid, when I was in high school, we had different classes we could take. One of them was small engine repair, where we took apart engines and put them back together and made sure they ran. We had all sorts of things on shop classes. I loved woodworking. I helped my teacher build a whole dining room set. That was part of my education in high school, was learning to do these kind of things. I thought that was great, and it prepared us for different. We had things like caring for. There was a class on just your car, taking care of your car. Those kind of things. I don't think they're in the schools anymore, any of these things. So people aren't being introduced to these things so people can find their love. I didn't care for metal class, but I loved woodworking. I didn't care that much about some other classes, like history at that time, but I loved all my hands-on classes. And I think if we got those back in the school, we'd see the trades growing again, especially now that they're paying so well. Oh, yeah. And we need to do that.
Mark, I'll ask you this question that I posed to the audience. And again, if you want to chime in, folks, 610-363-1110, why are we seeing this shortage? my opinion, Mark, I think, I mean, I could be wrong, but maybe, and this is taking the argument to the extreme, but like you said, if schools will maybe, just throwing this out there, if we stop teaching gender queer theory and start teaching useful skills with your hands like you learned, Mark, I don't know. Maybe we'd have more tradesmen. That's just me.
I think part of it could be the general 4-year college push, too. That was really pushed on the last two generations, saying, you're not going to make any real money if you don't get a 4-year degree. So I think that kind of scared people away into going into these trade routes.
Right. There's a snotty attitude by educational elites that degrees matter more than function. And I think that really is impacting our country. And when we stop respecting skilled labor, there's an economic consequences, and we're starting to feel it right now. Bottom line on that.
Mark, I appreciate your insight on that. Folks, we'd love to hear yours as well. 610-363-1110. Mark, we got some calls in the queue. Why don't we get to one of these
Let's go to
here?
our calls.
Yeah, let's get to Al. Al's calling from Florida.
Good morning, Al. What's on your mind this morning?
How you doing?
Good.
When I used to listen to Shanna, she was always talked about the Roth IRA, and she was a big proponent for that. So I think I talked to you last week, as a matter of fact, about the Walmart deal. I have a traditional IRA with Walmart, and I am going to switch it out. And when I switch it over to like the Timothy plan or something like that, do you suggest putting it into, I guess I have to sell it and put it into a Roth IRA and pay the taxes now, or just switch it over into a regular traditional account? I have stopped investing into the traditional and change all my investments right now into Roth IRA. But I still have some left over.
Okay, so you already have established a Roth, and that's good. I agree with Shanna. I agree with Dan. I agree with almost the whole world on this. The Roth is the first IRA I really liked. The traditional IRA, all it did was defer your taxes to the future, and that's scary because here you are working hard, making good money, possibly, and then you're deferring the taxes to the future where you're not working at all. You have a set amount of assets to live on for the rest of your life, and you're going to pay taxes then. And then people would say, well, yeah, Mark, but your taxes are going to be lower because you don't have the income. Well, some people's taxes will be lower, but if you got to be in if your income is so low that you're really in a substantially lower tax bracket, you're in poverty by that point. So I don't like the idea of postponing our taxes to the future. A Roth IRA eliminates the taxes for the future, and I really like that. So if you have the opportunity, Al, and you can move this into a Roth and not impact your the Medicare premium on your Social Security because you have too much moving in, too much income in 1 year, then that would be good. Oh, by the way, if they do hit you up with that, there is something you can contest it. You can go back. This is something I haven't talked about. If you do a Roth conversion, it's a one-time thing, and then you get a letter from Social Security saying your Social Security is being reduced by $600 or a year or a month or whatever. They're hitting you on this because you had all this income, so you hit that threshold that they then penalize you for making too much money. Isn't that stupid? For making too much money. Well, you can write them and say, this was a one-time thing. It's not really, I live off my Social Security. I need this. I will not have this happening again. It was a one-time thing, and they usually will give you your money back. So, just in case if you do convert it, and it does do that to you. So, Al,
we're not talking about millions of dollars. I think we're talking about 10 grand.
Oh, okay. I don't think that's going to flip it unless you already are bringing in a couple $100,000. So as income here. So that's good. I like the way you're thinking. It's good stewardship. Minimize your taxes. Pay on to Caesar what is Caesar's, but no more. It doesn't tell us to donate money to the government. So do the best you can to minimize the taxes so you have more money to care for you, your family, and those that God puts in your path, Al. And from our past conversation, I think that you're a good steward, and I think that you're doing the right things and honoring God.
So just go ahead and pay the taxes now and switch it into a Roth then, basically. That's what I would do. Okay.
You get away from holding a stock that's grieving God's heart. You get into investing with biblical integrity. You get into getting rid of the taxes for the future. It's all good. You take care of it now and move forward with sleep better. Enjoy it. God bless you, Al. What? Go ahead, Al.
What was that, Al?
You mentioned the Social Security going down, but I'm still working, and a lot of people I've heard talk, you don't want to work after you collect Social Security because, you have to pay taxes. Well, I do work, and yes, I do have to pay some taxes, but my Social Security does creep up every year. But the money I make compared to how much my tax, it's well worth working, even if you're collecting Social Security.
Love that, Al.
I feel the same way. God bless you, sir.
That's awesome.
Thank you for your call in. I enjoy talking with you, Al.
Yeah, Al, thanks for that call. And Al, thanks for your wisdom too. Mark, I'm so glad he said that. I think there are so many nuggets of wisdom that Al gave us there. When you're talking about biblically responsible investing, but also being a good steward of your time. He's not just saying, all right, I'm kicking back on Social Security. If I can work, I still will. I think that's awesome.
Yeah. I agree. Yeah,
for sure.
Work. I think God created us to work. We feel the joy of the Lord when we do work, and because we were created to work. That's why He put us in the garden. When we work as unto the Lord, we feel His joy, and that's part of the wonderfulness about being alive is feeling God's joy.
Yeah, that's great, folks. Appreciate it so much. You have to leave us. Hope you have a great day. We got more financial issues right after this. Call us right now. We got a line open 610-363-1110. We'll be right back after this break.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com. Tony is calling from the great state of Minnesota.
Hi, Seth. I've been a partner for probably about 6 years, and I've been a monthly soldier for probably about 5. I wanted to talk about the value of financial issues. A full-service broker was managing my portfolio for a number of years, and I was paying them 1% of my portfolio value for all the things that they did for me. The things that they were doing is pretty much the same thing as Financial Issues is doing, as far as stock picks and asset allocation and live advice. The idea that you're only charging, $135 a year, that is ridiculously low when I was paying 1% of my portfolio value. So I think everyone, all the partners, should be a monthly soldier.
Thank you for standing with us, man. It's an honor to stand shoulder to shoulder with you, brother.
Invest without compromise. Go to financialissues.org to get started today.
I want to make a point. No matter what happens, I'll always be there for you.
I know.
363-1110. That's the number to call in. You can call in right now, folks. We'd love to talk to you. If you got questions about anything we've talked about, the mechanics stuff from earlier, the markets, your portfolio, what's going on in the political sphere, the economy, we want to hear from you. 610-363-1110. Mark, we got a call coming in from the West Coast. We've got
Well,
Lynn.
that'd be good.
Yeah, Lynn's calling from Oregon.
Good morning, Lynn. Thank you for calling. What's on your mind?
Yeah, good morning to you. I have a question about that sell alert that went out. My platform doesn't name that exactly the same. It's the suffix, I guess you would say on it, is PRC. That's FP42.
Right.
Hey, Lynn, you can go ahead and say it, Lynn. It's okay. It's Cody.
Okay.
Yeah. Cody PC, right?
Yes. I just wanted to make sure that the one I'm selling is indeed the one you're referring to. If mine is a PRC. So I thought if you have the Q6 number, that would help because doesn't completely identify it?
Yeah, I don't have that off the top of my head, and maybe somebody could look it up. But the Cody what we put the sell alert on, that was for, I believe, the preferred that the Cody had issued. Now, if we're doing it on the preferred, there's a good chance that we're doing it on Cody, which we are doing. So you probably have just CODI as the symbol, which you're talking about.
Yeah, I have. My platform says CODI PRC.
Right, that's the one the alert is on. You're absolutely right.
And it is a preferred.
That is it. It is a preferred.
Okay.
The problem is, I guess you read the alert. The problem is there's too many issues going on. There's too much inherent risk with the audits, with the high debt, with the possible fraud, even the reporting. If I remember correctly, and I believe I do, they're like 6 months behind on their reporting and stuff. So we just feel like it's time to move on. We don't need to carry something that has that kind of risk in it for our partners. So we're just saying this thing is rusting from the inside out, and we can't tell how bad it's rusted. So let's move on. If it turns around, if it turns out they're able to clean it up and get it moving in the right direction, we'll buy it back later. But right now, it's not worth the risk.
Okay, so just to confirm, if mine is a preferred and it has the PRC, it is the one to sell.
It is.
Okay.
It absolutely is. That's what the alert was about, right?
Okay. All right. Good. Thank you. And
well, very good.
If I have a second, I just wanted to give kind of a testimonial, I guess, if that would be okay.
Please do.
Yeah, Lynn, go ahead.
Okay. So I've been thinking about moving some money from an IRA over to a Roth, just so that I can put it into my stocks that I get, the information that I get from financial issues. So I went to my accountant, and he said, do it as long as your account is making more than what you would make in your IRA. And so I called my platform yesterday, and I said, what am I doing over the last 5 years? And he said, and he gave me the numbers, which were much better than I thought, the percentage of growth each year. And I said, well, how does that compare with, I know you have millions of customers, but how does it compare? And he said, I hardly ever talk to people like you, and I talk to people all the time that are doing as well as you are. And he said, over the last 10 years, if you average your growth over the last 10 years, it's 10%. And he said, that's really phenomenal, even through COVID, that you've managed to keep up a 10% return average every year. And I said, well, I just buy the stocks that I get from the group that I belong to, and they tell me what to buy, which is financial issues. So I was really pleased that I'm going to pull quite a bit of money out and put into my investments that I get off of financial issues.
Well, praise God. Thank you for that.
Awesome,
Those are kind words, and I'm glad God blessed you over these last 5-10 years. It has been good markets primarily, so praise God for all of that, and give God the glory. Thank Him for it. Remember, there's a reason that God gives us this froth. I call any money we're able to put in the market that we don't need for daily living, it's the froth. He promises to care for us. But anything above that, He's given us this to use towards His glory, which means how we take care of ourselves, our families, our friends, even our enemies, but mostly those that He puts in our path to care for. So He's given us this froth for a reason, and that's to glorify Him. And it sounds like you're doing that through your stewardship. First of all, the way you're carrying and maintaining your portfolios, it sounds like you're staying on top of them a bit here by looking to do the best you can with what He has entrusted to you. But also, I hope that you're looking forward to how you're going to utilize this to His glory as well. So thank you, Lynn, and thank you for calling. And I hope that the sale of this and moving out of something that we believe is not in your best interest and moving into something that glorifies God, as well as being a long-term potential stocks will continue to benefit you. God bless you.
It's awesome, Mark. 610-363-1110. Folks, we got a couple open lines here. So you can get in right now, 610-363-1110. Mark, I'll jump off Lynn's back there and share a quick testimony here. You had urged me yesterday when I was telling you about, putting some money into some of the, Timothy Plan high growth funds for my children and their custodial account, and actually talking to them about why we chose these funds, why it's so important to God's heart that we're not putting their money, this is going to be their money someday, that it's not invested in things that are going to kill babies or are going to trans children or are going to grieve God's heart. And they started to understand it. I mean, they're so young, but just the joy of knowing that those seeds are getting planted so young, they're seeing this is their money. And even right now, it's being used to God's glory. It's amazing. It's amazing. There's nothing like the peace that comes with that.
And that is amazing. It's starting young, helping children invest. One of the things I found, and this is a great moment to talk about this, investing with biblical integrity changes the whole thought process. It rewires the brain. When somebody finally gets what it means to invest with biblical integrity, only invest in things that honor God and glorify Him, or at the very least don't offend or grieve Him, then your brain starts thinking and it starts getting rewired, and it starts thinking about other things in your life. How do you spend your money? How do you earn your money? How do you utilize all the other resources God has given you? And it starts changing your whole attitude about life, and you start looking at it from the eternal perspective instead of the here and now only, getting by today. You start seeing things totally different. And that's one of the main reasons I love investing with biblical integrity, biblical responsible investing, is it helps us start thinking like we should be thinking, like God designed us to think, to focus on Him and everything that's good and everything that's beautiful. That's why I love biblical responsible investing. It changes our heart as well as our mind, and we start living differently. We start living more charitably. We realize that we can't outgive God. He'll continue to provide for us. So if we see someone in need, if God brings that awareness to us and we feel that tug on our heart, we can step up and start helping somebody, not by just throwing one asset at it, like our money, but also by mentoring somebody maybe out of poverty to help them realize they don't need to be on the government dole. They don't need to be a slave to the income limits of our government. They can grow to their full potential in Christ. There's so much that happens when people get what it means to invest with biblical integrity. And I just love that. I love that although there's probably different ways it was taught 1,000 years ago or 1,500 years ago or 500 years ago, today here now where most of American households are in the markets. It's one of the best educational platforms to use, our money, and to use it, the stock markets, to help people rewire their brains, to get it in alignment with God's focuses. Everything's focused on God. Everything is to his glory. And when that happens, when we start acting like godly stewards, wonderful and righteous things ripple through us and all those around us, including our society. It's just a wonderful thing.
Yeah, it sure is. 610-363-1110. 610-363-1110, folks. If you got a testimony you want to share with us, we'd love to hear it. If you got a question, also call in with your questions. You got an IRA, you got a work 401k, trying to figure out what to do with it. We'd love to hear from you. We'd love to help you. 610-363-1110. Once again, folks, we do not have the Ag Report on today's live show. The Ag Report is on the website, though, for our farmers and ranchers. We will be hearing from Craig later this week, though, with our weekly Ag Report. So you're going to want to stay tuned for that later on this week. But if you want today's Ag Report, you can find it on financialissues.org or the FISM app as well. Phone lines are open, folks. 610-363-1110. We've got more to talk about, questions to get to, and your calls all on the other side of this break. Don't go anywhere. 610-363-1110.
Tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that he's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
Expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. A couple more calls to get to here. If you want to join the conversation, get in the queue right now. We'll get to you today, but you got to call in the next couple minutes, folks. 610-363-1110. Mark, what do you say we go out to Idaho and talk with Deborah? She's calling from
Idaho. Let's go to Idaho.
Yeah, let's do it.
Good morning, Deborah. Welcome to Financial Issues. What's on your mind this morning?
Good morning. Thank you for taking my call. So I've been listening all morning, and I hear a lot of talk about traditional IRAs and Roth IRAs and rolling over, but I don't ever hear anyone talking about accounts when you're retired and you can't invest in a Roth because it has to be earned income that you're doing. So I have a traditional Roth, and or a traditional IRA and a Roth account, but I also have a designated beneficiary TOD plan, and that's the only one that I can put money into. Is that the case? Because I was told from my tax guy, when I did work, you could only put up to $7,000 in your Roth, and the IRA, traditional IRA, is only for when you're working. And like I said, I'm retired. So how do you invest? Where do I invest this money I have in my savings account if it cannot go into a traditional IRA or a Roth?
Right. You open up an individual account that's non-qualified. It's a taxable account, but it still gets tax benefits regarding growth, because when you're in a non-IRA, a non-qualified plan like an IRA or a Roth, you're taxed every year on the gains that you have after offsets and all that kind of stuff. You'd be taxed on those gains. But the capital gains tax for long-term capital gains, for those stocks you've held over 1 year before selling at a profit, those capital gains, long-term capital gains, are substantially less, even down to zero for lower tax brackets, normal income tax brackets, and then a fraction or a third for the higher tax brackets of what normal income tax would be. So effectively, by buying stocks in a taxable account and being a longer-term investor in them, meaning you have long-term capital gains instead of short-term, you actually get a discount on your taxes for those. So that's not a bad place to do it. Short-term capital gains are taxed just like income, like dividends, interest in a year, or other earned, or if you had earned income. So yeah, that has the same tax rate. But if it sounds like you don't have any income coming in besides your Social Security, even that probably wouldn't be taxed hardly at all, because you'd be below, if there's no other income besides your Social Security, you'd be below the threshold of having to pay taxes on it. What is that? I don't know that threshold off the top of my head for 2025, but we'll look that up, because we're going to be talking about that very soon, about all the new rules for your taxes. But a individual investment account, non-qualified account, would be the type of account you'd want to open. So you could just dump your money in there and start getting invested, so it becomes more productive. And even after taxes, it should do better over any reasonable amount of time, years, especially long-term, than any savings or money market would do for you.
Right.
Does that help, Deborah?
It does help. And one other question. So if I were to stick $200,000 in that account, that initial $200,000, if I take that out, I'm not going to be taxed on that. I'm only going to be taxed
correct.
on...
Your cost basis would be $200,000 there, right?
So everything I put in, it's not taxed. It's only on the dividends or interest I make.
Dividend, interest, or the growth. So if you took $200,000, and I'm going to use one stock, which we would never do if that's all you had. But let's say you put in one stock and it doubled in price, and you pull $200,000 out. If you pull it out, and you may note that you're pulling out first in instead of last in, then you would so you're selling off. You could, and so it doubled in price, and you sold it all off. You could pull out $200,000 without any taxes. You'd have to talk to your tax accountant on how to do that best, but you'd only be taxed on the growth of that.
Okay, so it's better to keep it in that type of account than a savings account with my local credit union.
Well, yes and no. Yes, if you already have the moat around your castle set up, meaning that you have the occasional an account that covers all those occasional expenses like Christmas, car repairs, house repairs, that kind of stuff, and you're keeping that up, so you have also a few months of living expenses covered in a savings account. That's short-term money, and then you put the rest into an investment account. That way you don't go to credit cards when necessary. If you have that savings account set up to cover occasional expenses like, taxes, insurances, if you pay your car insurance every 6 months, birthdays and holiday and Christmas gifts, those kind of things. You keep that money in a short-term account so you don't have to pull it out of the long-term account, or you don't use credit cards to do that kind of stuff. And you prepare and you figure out if your car is older, you want to put more in that account for repairs for a car than if it's brand new. If your house needs repairs, you want to make sure you have the money in the short term because you're going to be using that. So you establish a savings account first as a buffer zone, and then you put the rest into your investment account.
Deborah, that's a great call. Thanks so much for bringing it to us. Mark, we got another call coming
Deborah,
in here.
God bless you.
Yeah, God bless Deborah. Joyce is calling from our home state of Pennsylvania here, Mark.
Hi, Joyce. Welcome to Financial Issues. Glad you're calling in this morning. How can we help you?
Hi. Well, I'm 6.
Hang on a second. Sorry.
Sharing
hey, Joyce, we actually lost you there for a second, but I think we got you back now. Sorry, could you repeat what you just said?
Yep. I'm 62, retired. I use a Christian healthcare sharing program instead of insurance. So,
awesome.
Earlier this year, I thought, well, I'm going to start converting some of my traditional IRA money to Roth. I already had one set up. So I took $50,000 out of the $350 and converted it. And I had never heard till I was listening to your program that could affect my Social Security. But also, it sounded like Medicare was mixed in that mix.
Yeah, it's a mess. You have your you don't have your Do you have your Medicare pulled out of Social Security, right?
I don't get Medicare yet.
Okay, all right, that's right. You're 62.
Yeah, I did just start getting Social Security this year, so I didn't know if I'm going to be messy when it comes tax time or whatever.
It could get a little messy, but nothing that you can't handle.
Part
it's
of the
not
fun
that
of
big
taxes,
a deal.
Right, Mark?
Yeah, the fun of taxes. I don't think anybody's ever wrote that book before,
right.
Seth.
Absolutely.
The fun of taxes.
That's my next book, Joyce.
So, Joyce, here's the deal. When you bring in too much income, and I don't know what the threshold is. I know it's hundreds of thousands, maybe a couple 100,000. When you hit a certain income level and you're taking Social Security and you're on Medicare, what happens is they start charging more for your Medicare. And that is, for most people, taken directly out of their Social Security. So when that happens, it reduces your Social Security. That's how that impacts your Social Security. Now, it's not like reducing it drastically, but it does reduce it. So we always want you to be alert and aware and conscious of these things, that it could affect it, because some people actually live off their Social Security, or it's a major portion of their retirement. And so it'd be understandable to be careful about that. Now, I also brought up earlier today on the show that I've spoke with several people, and even in my life, when I sold my practice, they came back and said, wow, you have this huge amount of income for the last few years because of the sale. They didn't say why, just because of my taxes, my income went up so much that they cut back mine and my wife's Social Security to pay for the increase in the Medicare because our household had such a large income. By writing to the IRS, sometimes they will say, okay, this was a one-time deal. We understand it. And, I talked to Social Security. I talked to Medicare. We all talked. And I wanted to find out what the specifics were on that. And I don't have them here with me. But they do say there's an exemption for one-time situations. Now, I can't guarantee that they will give you that exemption. But if somebody does a one-time conversion of a traditional IRA to a Roth, there's a good chance that if you get that notice saying they're going to impact your Social Security for the Medicare, that they will reverse that for you, but it's not guaranteed.
Hey, Joyce, I'm going to jump in for just a second here. We're coming to the end of the show. Mark, why don't we hold on with Joyce, because I think she might have had a follow-up question there. Joyce, if you can, just let us finish the show out here, and then maybe we can talk to you after the end of the show. Mark, is that all right with you?
Yeah, I'm good with that. Is that good with you, Joyce?
Yeah, great. Thank
awesome.
you.
Okay. Hang on there, Joyce.
We'll hang in there, and we'll have a little conversation after the show to go deeper or for your follow-up question, since we don't have time in the
happens
in the
Mark.
show. I know. This is a time machine. It just moves us forward faster and faster, which means I'm going to get older quicker and quicker by doing this show because it goes so fast. But that's okay, because I get to do wonderful things like care for and serve you, our partners and our listeners, and help you understand how important it is to invest with biblical integrity, how important it is to glorify God with all we have. Thank you for that, and thank you for being with us, and thank you for honoring God with all your investments. God bless everyone. See you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.